Yeah. See, when we have the all partners are insolvent, so always remember that whatever the liabilities of the outsider will not be transferred to the realization account. The separate account will be prepared for that. Like we have here trade creditors and loan that is secured by machinery. These two accounts are prepared separately and it will not be transferred to the realization account credit side. So, as usual, other assets like machinery, furniture, stock, this will be transferred to the realization account debit side, and cash at bank will go to the bank balance, debit balance of 10,000, and profit and loss account shown in the asset side, that is 84,000, that is known as a loss. That loss will be shared among the all three partners according to profit sharing ratio. In this question, the profit sharing ratios are equal. That means 1 is to 1 is to 1. That means 84,000 should be divided among these three partners at 28,000, 28,000, 28,000. After transferring this, the capital balance, that is 40,000, 35,000, and 25,000 will be transferred. Then we have all the assets. The firm dissolved due to insolvency of all partners. Machinery was sold for 18,000 while furniture is 14,000 and stock realized for 35,000. The when asset is sold, that will be credited to the realization account by bank account, machinery, furniture and stock. The total value of that comes to 67,000. The 60,000 7,000 is received as cash that will be deposited into bank account. So bank is the receiver. So bank account will be debited by rupees 67,000. That is to realization 67,000. The next adjustment says the realization expenses is rupees 2,000. The realization expenses 2,000 will be debited to the realization account to bank account 2,000, that is in respect to realization account, that is realization expenses. Realization expenses, and this will be credited to the bank account credit side. So by realization account 2,000. Then last statement says that nothing could be recovered from Priya and Prachi, but 3,400 could be collected from Preeti from private estate. That means here all partners are insolvent. So only one partner, that is Preeti, is able to provide 3,400. So whatever the possible amount is collected from the partner should be received first. That should be debited to the bank account. So bank account will be debited to Preeti's capital account 3,400 and capital account credit side Preeti column 3,400. Now question arises how much we have the liabilities. Liabilities we have loan account 30,000 and trade creditors account 50,000. Total loan outside that liability is 80,000. Then we have to see that how much is the bank balance available. The bank total receipt is comes to 80,400. Out of this, 2,000 is paid as a realization expenses. So we are receiving 78,400 as the balance in cash. So the remaining amount, so we have to pay 80,000, but out of this, we have only 78,400. So there is insufficient fund form with the form. So how can we pay that? First of all, we have to see that how much is the secured liabilities. When you talk about the loan of 30,000, that is secured by machinery. So whatever the amount realized out of machinery should be given to the secured loan. If you see the adjustment in the realization account, the amount realized out of machinery is 18,000. This 18,000 should be given to the uh, loan account. The remaining cash, that is 60,400, will be distributed according to the proportionate of the liabilities. What do you mean by proportionate of liabilities? That means if you see the loan account had 30,000, and out of this we are already paid 18,000. The balance is 12,000. So when you come to the creditors, that is 50,000, and nothing is paid to the creditor. So again 50,000 is balance. The total balance is 62,000, but cash available is 60,400. We cannot make a full amount to anyone. So we have to make a proportion of 12,000 and 50,000. That means 12 is to 50. That is to 6 is to 25 ratio. According to 6 is to 25 ratio, we have to divide. That is 60,400. So when you divide 60,400 according to 12 is to 50 or 6 is to 25 ratio, the payment of the loan comes to 11,690, and payment to the creditor is 48,710. These two payments will be made to these two parties. So bank is the giver. So bank account credit side, the loan will be paid 29,670, 690, and creditors is 48,710. And this is the receiver of those liabilities. So liabilities account debit side, so creditors account debit side to bank account 48,710, and loan account debit side total amount 18,000 plus 16,000 11,690, and total comes to 29,690 is paid to the loan account. So total paid is 29,690 to loan. The another 310 rupees is called as a deficiency, that is should be transferred to the deficiency account, credit side. The same cases in the case of creditors, total amount to be paid as 50,000. Out of this, 48,710 rupees is paid. That means remaining amount, that is 12,000, 1,290 rupees is deficit. Means firm doesn't have that much cash. That will be credited to the bank account. That is amount is the deficiency account, that is amount is 8 uh, 1290. So after doing this you have to close the realization account and determine the losses or profit. Here it is a loss of rupees 21,000 will be distributed among the three partners equally, that is 7,000, 7,000, 7,000, and that loan, the loss will be debited to the partner's capital 7,000, 7,000, 7,000. Whatever the balancing figures of this capital account should be transferred to deficiency account. In these cases, where we have the Preeti has 43,400, credit is more and debit is less, that 8,400 will be the deficiency. That means Preeti is unable to get that cash from the firm because all other two partners are become insolvent. So this will be credited to the deficiency account. That means he is losing that much of loss, suffering that much of loss. And in respect to the Prachi is having the debit balance is more, that is 35,000. Credit is only 25,000. That is 10,000 rupees is the deficit that should be debited to the deficiency account. Ultimately, the Priya's account tallied both the sides. There is no balancing figure in the Priya's account. The capital Prachi's capital 10,000. So total of the both the side comes to 10,000. That means ultimately end of the question, your deficiency account will be tallied. That means Prachi is unable to get this 10,000, unable to bring 10,000 to the firm, and creditors and loans will not able to get 1,290 and 310 rupees, and Preeti is unable to get 8,400 from the firm because of a loss. Therefore, so these cases we have to prepare the separate liabilities account, and we have to see that here we are paying more to the loan account, because loan is the secured loan. That 18,000 out realized out of the machinery only should go to the loan account, because it is a secured loan. Whenever it is a secured, that liability is to be paid first. So